As we discussed in last night's video, I went over some big levels to be trading at for CPI data. The biggest levels that I said it in last night's video gave us the biggest move today. What is going on, traders? We guys crushed it today. In today's video, I'm going to show you how I was able to capitalize on my trading plan today, as well as preparing you guys to trade the best setups at the best prices. If you would like to be a part of the #1 options Discord in the world, the link is in the bio. We have a 30% off deal happening right now. That code is expiring by the end of the week. Get it now because prices are going back to normal this weekend. Let's get into it. So, clearly, the market did not like the CPI data this morning, right? I'm not going to get too much into the details of the CPI data. Just like you guys, I personally use other big YouTubers to dummy down the information, right? Give it to me nice and easy so I explain it, not using these big terminologies and blah, 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 right? So you watch the videos, you understand about the CPI data. I'm here to trade. This is what this channel is for. I'm good at what to do. I'm good at what I do. I am the best at what I do. And this is why I have this channel. So this morning's pre-market live stream. Let's not even talk about last night's video, right? If you're not part of the Daily Sniper and you watched last night's video, you guys were prepared to trade some pretty phenomenal levels today. So in this morning's pre-market live stream, we had some big levels, right? The make or break it level that we had on SPY to the downside was 600. We knew that SPY had a gap to fill at 679. Let's scroll back, and this ended up being on February 7th's gap. February 7th's close. We had a gap to fill, right? This was the make or break it level to be watching out for SPY. Okay, so we have 600, and then we came up with 679. We knew these were big levels. Now, if you end up looking up, we knew that 603.05 was a big freaking level, right? When you gap down of a massive macro level, when you come up to it, first reaction is usually a put. When you gap up and come back down to a big level, it usually ends up being a call. Where did this level come from? You guys have been watching my channel. If you're new to my channel, we know that 603 is a big level, okay? Let's look left. Let's look at Tuesday. Look at Tuesday's lows, right? Holding this level as support. Let's look at Monday's lows. Holding this level as support. Let's look at Friday. Held this level as a resistance. Let's look at last Saturday. Held this as a support. And last Wednesday, we also held this level as support. We knew this was a macro level, right? So, trades, we ended up getting it today, guys. I ended up getting 600 calls right here towards this bottoming right here. Brought those deep in the money. Look at the 603 puts, right? This is what we talked about in last night's video, first reaction. If you find weakness at the previous support, this is where the best level to be doing shorts at. And this is the exact move that happened. So I ended up catching a part of this move. I ended up buying in around the 602 level, right? The big level that we talked about. Sold this deep in the money. Next trade I ended up getting into calls on this Doji 5-minute candle. And I did this live on live stream. I'm not just typing in a chat room. I did this live right here. Ended up alerting 600 calls. We had sloping resistance, but we had a higher low. I like the bounce level, right? As soon as we were coming back down, we're coming back up. I ended up getting into 600 calls and obviously sold these deep in the freaking money. No, I did not stop there because today I ended up having a 5-figure day today. Don't worry about how much money I make. Don't worry about anything. I'm not here to stunt on anyone. I'm just trying to show you that I am a real trader and I do real trades, right? And I'm not trying to sell you on how much money I make. I'm trying to sell you on how much money I could potentially make you. So right here, these contracts did 50 cents, right? So if you bought one contract, you would have made $50. If you bought 5 contracts, you would have made $250 in just this move right here. When I ended up buying these calls went up a full $1, and we went safe contracts 3 days out. Look at what these contracts did. These contracts almost doubled in price. So, and I'm not saying to hold the whole move, but if you would have bought 2 contracts, you would have made close to $100 on this trade at the absolute minimum. Okay? Don't worry about how much money other people are making, right? Focus on their quality of trades and what you would have potentially made taking that trade, right? And in full detail, I'm also explaining in full of why I'm entering the trade. And if you don't agree with me, here's the opposite point of view. Here's what the opposite side is looking towards. And we do this live on live stream, guys. So anyways, ended up getting 603 puts, brought these deep in the money. I actually sold this move, came back up, I bought in again, came back up, I bought in and sold again, right? I was just scalping this level. And why did I end up getting in puts while it's out of support? Well, I don't trade shapes, but we had a massive fucking head and shoulders on the chart, okay? Big head and shoulders. It was inevitable right at our key level, a 604.50, okay? So we had confirmation of a big resistance of a previous support zone, right? Previous resistance, previous support zone. This is the pocket that we talked about in 2 videos ago. It's a big pocket. Came up to it. Shorts printed perfectly. Okay? Once we ended up seeing some weakness, the reason why I got into puts because the top level was a resistance. The bottom level is a resistance. So why am I going to buy calls in an uptrend when both of my levels are rejecting? No, I'm gonna know that SPY is going to dump, and this is the reason why I ended up getting into 603 puts and sold the move multiple times because I knew that SPY was going to dump and I knew weakness was gonna come. But until when, right? We knew until 603 became a support. We broke through 603, came back down and retested it. Honestly, I did not buy this move at all. I ended up getting puts again and alerting puts here with a tiny stop because I wasn't buying this move. We did have a sloping resistance in play. We did break out of it, but the way SPY was moving, I just didn't trust it. So I tried puts, lost 14 cents on my contracts. It was nothing big, went in late. But yeah, that's pretty much what happens when you're sitting on the computer all day and you're winning all day. You're gonna end up taking some trades. You're gonna end up seeing the chart differently because you've made a lot of money and you don't. You're just blinded. You're like, I can make money, and you don't really care about the loss because you made so much. That's the reason why this trade. But in hindsight, I admit I am wrong. Right? We held the 603, the 602.70s level that we've been talking about. This was a support. I made a shit ton of money shorting the crap out of SPY from the highs, right? And once we ended up coming back up here at the 200 EMA on the 5-minute, I ended up getting puts here and then got stopped out. So it just comes with the game, guys, right? You don't win even on green days, you still have some losing trades. That's why you never size in heavy. You don't full port, right? It's very difficult to be able to time tops and bottoms. This is why I'm a true advocate of dollar cost averaging, right? Usually what I like to do is I'm in 30 to 50% of a full size position, right? And then I'll double down and making sure it's always a double down of what I currently have, the amount of contracts I have, to dollar cost average my contract shares. Okay, that's exactly what I'm doing to bring my cost average down with me. Okay, it's very important because dollar cost averaging, right? If I'm buying shorts right here and we hop back up here, I could double down. And once I get back to where I first bought in, I'm already green, right? And I could sell where I originally bought back in. This is why dollar cost averaging is what to do. Too many people try to get rich too quickly. They're hitting so much with size. They're hitting same days. They're hitting shitty contracts. They're just playing. They don't know what they're doing, right? They're just trying to make a lot of money very quickly. And as skill of a trader that you are, you're going to get clapped in this market from over trading. I've seen it. I've seen people with 7 figures lose all their money from doing same days and just hammering charts, right? We've heard stories about people that have lost like $10 million trading options. It could happen to anyone. This is why I always preach to everyone. Not only do you need to have an entry, not only do you need to have an exit for profit, you need to have a stop loss in play. The same stop loss every single time, because the more consistent you are at winning is the more consistent you are going to be at losing. Every trade is different. I agree with that. I hear that side of the story. But I'm telling you right now, from experience, if you kept every single trade you enter at a 20 cent, 25 cents on your contracts down, stop loss. Hypothetically speaking, whatever that number ends up being for you, your risk tolerance, if you, after 10 trades in a row with the same stop loss, you're going to be green, because we are all right more than we're wrong. It's just that sometimes when we're wrong, we lose more money than we make, and we just got to stop that, okay? So I prepared you guys for the best levels in last night's video. Today was a beautiful day, man. Calls here, puts here, calls here, puts here, puts here, puts here. Just scalping this. So I had a crazy day today. The biggest day of 2025 personally for myself. So very pleased with that. Now, let's look at what we're going to be doing tomorrow. What's the first thing that we do? We're going to end up going to forexfactory.com. Tomorrow is Wednesday, February 13th. Let's look at this chart. Look at the chart. What do we got? 8:30 a.m. core PPI month over month, and we got unemployment claims. After that, yellow folders don't matter, okay? So that's exactly what we know we have news. And guess what? The news is happening before market open. So now let's look. I'm going to zoom out right here, right? At the start of every single week, what I like to do is I mark out the previous highs and the previous lows of the prior weeks, and I keep those levels on my chart, okay? So we still have the high of last week around the 609 level, right? The low of last week around the 590. Let me look. 590 level, right? So we have the highs, we have the lows. Where this week may be an inside candle without news. If we end up breaking the highs of the previous week, SPY is going to all-time highs. If we end up breaking 590 this week or next week, SPY is dropping all the way to the sub 570s. It's inevitable, right? We have extremely bearish weekly chart at the moment, in my opinion. Other people will view this chart differently. Like, look at, all green weeks, but we're making lower highs, lower lows, lower highs, lower lows, lower highs, lower, right? So this is bearish until next week's candle ends up making a higher high and a higher low. We are at resistance on the weekly time frame right now. Anything can happen. Let's keep an eye on Bitcoin. Bitcoin's holding liquidity. I told the entire Discord this morning to keep an eye on Bitcoin, and that I'm watching Bitcoin right now, and as bearish as the news was, as big as the sell-off was in the S&P 500, Bitcoin is unfazed. Bitcoin's still floating 96, 97, 98 grand, right? Do you know what that means? Liquidity is not leaving the financial markets. People are still buying and holding. So there's no reason to be shorting and doing puts on companies in the S&P 500, the QQQs, or in crypto at the moment, because there's no indication of market or of liquidity leaving the market. You got to keep an eye on this, guys. Don't just be like, oh, we did such a big drop. We came all the way back up. It has to come back down. Stop that. We trade levels. We knew SPY was going to be bullish once we held 600. We knew SPY was going to be bullish once we held the gap at 679. We knew SPY was going to be bullish once we held our key level 601.79. We knew SPY was going to be bullish once we held 603. Look at all the levels. Previous resistance, previous support, shoot up $1.50. Okay? Trade levels. I don't give a hell what your indicator says. Stop relying on indicators. I don't use zero indicators. I'm not watching volume. I'm not looking at IV. I'm not doing anything. I'm market buying, right? And I'm watching price action. I'm just good at price action. Maybe you need to have indicators. A lot of people that use indicators usually means that they have lack of education in the market and they have to rely on indicators. Stop relying on indicators. Try to get good with a blank screen. Get good at reading price action. Indicators are going to screw your mind up. Yes, they could help you, but you need to go to the roots of your problems to begin with. You need to be able to read price action. I'm seeing way too many new traders and even people, experienced traders, they get taught on indicators and now they can't trade without an indicator. You can't give them a blank screen to trade off with. You need to get good. What I recommend, anyone watching this video, You take off indicators off your screens and just try to trade price action without levels, right? Pick one stock without any levels. Obviously, after you made your money for the day, but after the live stream, blah, blah, blah. Try to trade with 0 key levels down, right? And 0 indicators, a blank chart. Get good at reading price action, okay? Get good at your sloping supports and sloping resistances. Then you start incorporating your big key levels, right? Put your big key levels down with 0 indicators, right? And get good at trading key levels and price action at the best prices possible. And then once you finally get good at being able to trade and not need you don't need to hear someone on live stream. You don't need to see indicators, buy, sell, this, that. You don't need that. Then you're good. Then you just use your indicators, if you prefer to have them, as indicators. You keep them as indicators, right? They're always lagging. They're never going to be trailing. They're never going to be at the top. Indicators are always lagging, right? And they do work at key levels sometimes. I'm not shitting on all indicators. I'm just saying a lot of people are strictly reliant on them without even understanding how to read price action. So dial back down the indicators, right? And just pick one stock and just get good at it. Just get good at trading price action with 0 key levels. All you got to do is trade the stock, right? I'll turn these off for you. Give me 1 second. Fuck it. I'll keep them on. I don't know how to change them. Take off all the indicators. I just use moving averages. You guys know that. I only use them to sell at. That's literally it. I use the VWAP and I use a couple of moving averages. That's all I use. This is what my chart looks like, right? We understand without any key levels down here. We understand price action, right? We're putting uptrends, right? Putting sloping supports. We're looking for higher lows, higher highs, higher lows, higher highs, higher lows, right? You got to get very, very good at trading price action. So enough of that ramble. Moving forward to tomorrow, the biggest levels to be watching at is still going to be this pocket, 604.50 to 604.20. This pocket right here, just add it to your chart and look left. Look how much time we've spent in this area. This is a big pocket. If we end up holding its support, SPY is going to rip all the way to 605. We hold 605 support, 80-cent pocket up. We hold 605.80 as support, we're going to 607. Then we're going to 608, which is the biggest level, and then we're going to all-time highs. Okay, so if you would like to know my game plan tomorrow to see where market opens after the big PPI data comes out, the link is in the bio. 30% off happening right now. If you'd like to be a part of us, guys, link is in the bio. Thank you so much for watching. And just remember, 603 previous support of this week is a big freaking level. 604.50 is a big level to be watching. And then we have 600. If we lose 600 one more time, it's $3 down to the 597s. So try not to get overly bullish, overly bearish. It doesn't matter what's going to happen. Like, look at today. We almost ate up the whole move, right? We're just watching levels. We're watching higher highs, higher lows, higher highs. Keep an eye on that. Get good at price action, guys. Anyways, thank you guys so much for watching. If you would like to make money, 608 is going to be the best level for puts, small accounts, cash accounts. 603 is going to be the biggest level tomorrow, and I will be going over my trading plan after the news with the Daily Sniper community, guys. So link is in the bio. See everyone tomorrow. Take care.